Yes, guys, welcome to the next video of the technical section. So I believe this is the fifth or the sixth video, but pretty much we're going to be looking at voids and imbalances for this lesson. I kind of hinted at it in the previous lesson where we looked at order blocks, and there was one in the breaker block example. So yeah, let's get straight into it. So voids and imbalances, what are they? Like I said previously, it's an area of unhealthy price action which usually leaves a large up or down candle, depending on where you are, whether you're in an uptrend or a downtrend. So if we think about this in the institutional order flow theory, what you've got is you've got this manipulative up candle that makes traders think, okay, we're going up. Then as soon as that happens, a down candle, and then straight after, so much volume is poured into the market where if this is a 4 hour or a 1 hour, for example, this is extremely bearish. Now, if you were to look at this on the lower time frame, what you would see is straight down move. Like, honestly, there would be barely any pullback. So if this is a 1 hour candle, you might get a few minutes where you might see a bit of up movement, but it's very minimal. Now, what this really is unhealthy price action, because you've got such a large gap in the market with no orders of up or down either up or the down candles. You've just got massive move in that direction. And what usually happens is price likes to aim for that area as a draw on liquidity. So a draw on liquidity is when price sort of gravitates to that area. So yeah, I'm just going to go through this example right here. So let's just say, for example, we saw we were in a downtrend at the moment. So we're moving up. Then as soon as we start seeing this break here, started reacting off this order block right here, you can see it's a clean reaction. Went down even further. So you've got that low, the lower high, lower low, lower high again. Now we've got some liquidity building up there. But the main point that I wanted to hint at in this is that void or that imbalance. So let me just annotate it quickly. It's this massive move right here. But because so price moved up to there, but price went back down there. But the rest of this candle still had not been reached yet. Price had not gravitated towards it yet, but we know it's going to happen because we're in a downtrend. We've got this downward moving momentum. Now, what can we expect? What we need to do is we need to try get into a sell entry to aim for this liquidity void, first of all. But then let's look at the market even more. We've got this liquidity void right here as well. And what have we got? We've got equal lows right there. That's liquidity. This is what you call liquidity. Then you've got the liquidity void. You could call it the void, the imbalance, whatever you like to say, but it's unhealthy price action. That's the main thing that we're aiming for. Now, the logical thing is, let's just say we got a lower time frame entry, which is what happened. I believe this was in June on EU or something like that. I took it from my Telegram. We got into this sell right here. First, take profit would be this order block right here, because look, every order block is going to have some power. You know, you might get a small reaction from there, but depending on the rest of the market structure, and that's why market structure is so key, is you need to understand every order block has potential for it to reverse, but for how long? Because of market structure, we saw, okay, yes, we're in a downtrend. We've still got this void right here. So potentially we can take price even further. So what I would do is when I have this entry, I would put it in 2 bits. Let's just say you're risking 1%. And we're going to get further into this in the risk management plan. You would split up 0.5, 0.5. I would put one take profit right at the bottom right there, right here. The next take profit right there. Because if we know fundamentally that we're going to be going even further, potentially I would still keep some profit running. I would still keep it there. But it's the idea that this order block might have some power, or this whole area right here might have some power, to make it shoot up. But if you know fundamentally that you're still going to be going down, then yes, okay, you can still hold it for longer. So this example right here. Now, using voids as an entry, can you do this? Yes, you can. The reason for that, so I'm just going to explain what I've written down here and then explain further. Using voids as an entry is a lot riskier than any other type of entry because, you know, as we looked at, you got different type of order blocks, but with liquidity voids, okay, yes, if you enlarge this right here, you might have up, down, so this will come in a form of order block, up again, maybe an order block down, and then up again. So let's just say, for example, you wanted to enter off that one right there, but you know beneath that price action right there, there's a massive, I'm just going to make it big for the sake of it. There's a massive, massive order block right there. That's what you've got to be wary of. But if you're entering off a void, um, you've got to understand the theory of it. What happens when you finish that void? You're going to go down. So we had this sell right here. We got to a point of interest, whatever it was. We had that sell, went straight down, finished this area. So we completed that order imbalance. And as soon as we reached that area, price started to reverse because it completed this goal. It's closed up the void, you can say. Personally, I would really advise to not use void as an entry, but rather it's a different type of understanding. So, like I said earlier, if you remember the breaker block example, you've got that liquidity void, and then you've got this massive, hang on, let me clear it up just a bit. You've got this massive breaker block right there. And that's exactly what we've done here. I refined my entry slightly further because yes, I understood, okay, we're filling that liquidity void, but then we've got this breaker block right here that's going to hold some power. Entered, it was a sniper entry straight off, and then we started going off. So yeah, this is the one thing you've got to understand when you're looking at the markets so far from what I've taught. Just understand this. You've got market structure, premium and discount. What happens when you get to premium and discount? You go down to the points of interest. You've got different types of order blocks. You've got the engulfed one, the breaker block. Then liquidity void is area that you look for mainly as a take profit. Potentially, you could mix this in with some kind of breaker block or an order block. It's just the understanding of the market at the time. So very simple, very clear. When you get onto the market, identify liquidity voids, identify order blocks, identify market structure. Please, before the next lesson as well, unless you want to go through these lessons in a row and just take notes, but look back on TradingView, look back on any pair you wanna see, but try mark it out as I have. Personally, I use blue boxes for points of interest. When we get to them, yes, we've got an entry. Yellow areas, just to make it really, really clear if you want to, it's a liquidity void, and then a breaker block can be a different type of color. However, you know, it makes sense to you. But anyways, guys, take care and I'll see you in the next video.